Righto, money minders, welcome back to a bloody another week. The much-awaited Bellevue Quarterly is here. Bit more news out of the lithium business for IGO, which is IGO, effectively.
No, there's nickel there, mate. Come on.
There is nickel. What do we got? What else we got? Develops Quarterly, Gold Roads, the Battle for Nyanzaga.
Oh,
Bit of
mate.
an update there, Travie boy.
Twists and turns. I love M&A.
Sierra Rutile. Right in.
Yeah, we're going to go to Sierra Leone, boys. We're gonna go there,
right at
and
the
then
top of me watch list, that one,
Mate,
fellas.
how fortuitous of I look to demerge that.
Made a bit of
and then from
further
there we're going to jump into the Congo.
further Chinese investment. Now that sounds interesting. Tell you what, boys, you know what else is bloody interesting? You know what gets me up and out of bed, and I'd say every day now.
I want to know what makes you tick, Matty.
Well, for so many years I laid in bed just thinking, how can companies take their shareholder engagement to the next level? And look, for years I was just perplexed and I had nothing.
Yeah.
Until I started this.
Yeah.
Because the people we have met, one namely Rhori at InvestorHub, talk about, I don't think he realises the impact he had on my life by presenting the InvestorHub and solving one of my biggest problems in the world.
Mate, not all heroes wear capes.
Oh, no, because before that, I could sell shares and not really be held to account by MDs. Now, with the InvestorHub, MDs can literally check via the CRM, registry integrated CRM of InvestorHub, check who was buying, selling, moving up, moving down. Imagine if, they've now got the opportunity to ring up a shareholder and say, mate, what happened there? You sold all your shares. That person could reply and say, look, I think your company's bloody shit and I sold them. And look, but they've got the opportunity to do it.
Imagine providing better data analytics by 1,000-fold than any of the actual registry services out there. It's pretty phenomenal.
It is, mate. It's really bloody taken investor relations, and I love the word investor relations, but they're taking investor relations to the next bloody level with InvestorHub. The CRM, it's only one part of it, isn't it, Trav?
Most investor relations means how can we pump your stock? This investor relations literally means have better relations with your investors.
Mate, you could say you move the stop and ring them up and say thank you. If you're an MD or a CEO, mate, talk about bloody personal engagement at a whole nother level.
And if your surname is Stein, geez, he's good for a beer, isn't he, Rory?
Oh, mate. Absolutely, he's good for a good litre of beer. The old Rory Stein, absolute bloody GC. They're in town at the moment, coming to say good day to this week, I think, the InvestorHub boys. Any MD CEOs out there that want to just really take this bloody investor relations to a next level, do bloody top-notch investor relations. And because, mate, this CRM part is only one thing.
If you actually care about your investors, you would use InvestorHub. If you don't care about them, you wouldn't.
Mate, if you don't care about them, you can even use the data to ring them up and tell them that if you want. Mate, hey, your company, do whatever you want. But thanks to InvestorHub for getting on board.
Thank you very much.
Oh, love your work, buddy. JD, you'll be loving it in the doldrums of Melbourne, there, mate. You don't have to interact with me during sponsorship.
Oh, I don't think you did that anyway.
Mate, I just sit here and admire your work.
Just sit back and watch the show. Now, another. BHP.
Tell me about it.
Australia's biggest mining company.
The big Australian.
Big Australian. They have duties, fiduciary duties to their shareholders as well.
Yep.
On a much larger scale than what we talk about, what probably InvestorHub can provide. And look, we've seen in the news the other week about their ongoing Explore program.
Did see that.
Flicking a bit of cash to the junior explorers, just getting a couple of extra tickets in the chook raffle.
Mate,
Poke a few holes in.
They're going to have to be conscious about any announcement of that next year, because it seems like a bloody sure way to pump a stock, doesn't it?
Yeah. But on that fiduciary duty to their shareholders, Trav.
Yeah.
If you, I know $500,000 or whatever to an exploration company mightn't seem much, but every bloody dollar counts. I feel that $500,000 to make sure they get the best benefit for their shareholders, there should be a mandatory requirement that K-Drill is the exploration contractor for all of that Explore program.
You make a very good point, mate. I like your
I'd feel
thinking
more
there.
comfortable.
The wording fiduciary duty, like obligation to do the best by your shareholders. How do you do the best by your shareholders in an exploration program?
Get Ryan O'Sullivan on site.
Fuck, mate. Sometimes you speak some bloody wise words, you know.
Well, you just wouldn't think like a Kalgoorlie born and bred drilling company, and like Ryan O'Sullivan from humble beginnings could be such an influential factor in Australia's biggest mining company. But I think they can be.
I'm with you, mate. I often think of the Paulson's crew, which you were a part of, and Ryan was a part of, and many others in the industry were a part of. It's like the PayPal mafia of WA mining.
Well, mate, you look at what Paulson's turned into. It was a $40 million acquisition turned into what Northern Star being. What's that? What are they? 16 billion or something?
Something crazy.
Imagine if you applied that multiple to BHP by getting people like Ryan O'Sullivan involved. And look, BHP will be probably bigger than Apple after that. And
Fiduciary duty makes sense.
I'm not putting that out. So BHP, message to you: get K-Drill to be your mandatory drilling provider for the BHP Explore program. You will not regret it. Thanks, K-Drill, for all your bloody support.
Wise words, Matty.
Love it.
Speaking of OG,
straight from the heart.
Matty, speaking of OG Paulson's crew, this one is a quarterly out from Bellevue, who of course is run by Darren Stralo, who was the manager at Paulson's when you were there.
He was my first ever boss, Bellevue, aka everyone they pinched from Northern Star. Right, Bellevue. The quarterly was out. We've been waiting for this one. Done all right today, up 4%. Everyone was seeing because you look here, they were up at $1.80 and they've had a bit of a decline in the last couple of months, and everyone's thinking, right, what is this first whole-ish quarter? I think they poured first gold 24th of October.
Yeah.
What's this first quarter going to look like on the production front? Are they going to have enough cash in the door to keep them from raising money to service all the debt and everything? So the answers are here, gentlemen.
Tell me, Matty. I want to know.
Not definitive, but we're going to look into the crystal ball.
And we had a lot of rumours about this one. Obviously, we spoke about, people in the market getting a bit scared. The share price come up from about $1.80 not too long ago, just a couple months ago, and settled around $1.30. But it reacted pretty well to the news today, right, Matty?
So, look, they said they milled 85,000 tonne in December, so that's around that 1 million tonne nameplate capacity. Now, the constraint is their milling, not the mill, everything past the crushing, because the crusher's been overbuilt, so they can run it just during the day, utilise the solar and everything more, and overfill the bloody fine ore bin. So it's obviously the whole leaching circuit and everything, which is their bottleneck. So that circuit appears to have getting up near that nameplate. They produced 15,500 ounces, boys. So 9,387 of them were poured in December. So, recovery's sitting at 93%. The cash position, so increased by 5 mil to 44 mil, but they did draw down 35 mil of the new debt facility. I think that was last quarter they had that in place. So
that's that working capital facility now, which is now fully drawn.
Fully drawn.
Yeah.
So net debt position of 181 million. They just said obviously part of short-term risk mitigation and cash flow management strategy. So you'd be mad not to.
Which is being prudent during ramp up, basically.
Maybe that's why they paid Develop at the start of January instead of December. But we'll get to that one later. So they've put ounce guidance out. They haven't put any cost guidance out. So their production guidance for the second half of this financial year, so they've got midpoint of 80,000 ounces. So if you look at the day, in our head, we're like, it's going to be sort of a 200,000 ounce producer. But if you look back at their DFS for this year one forecast, they did have 168,000 ounces for that year one. So remember, they started pouring gold about October. So 80,000 ounces, that's around what they forecasted for that first year. So it's not a we were expecting that. Right. On the mining front,
This is what we care about.
Oh,
Isn't it?
geez, I bloody love mining. God, you're putting that much finance in my life these days. I forget how much I love mining, so
Mate,
I've got to keep it balanced.
It's the first time I've seen like a subheading in a quarterly titled "Stoping Performance," and I thought this has got Maddie all over it.
Oh, there you go. You didn't even know what that bloody was till you met me. So, mate, stope ore grade was 4 grams per tonne. So that's currently below their underground reserve grade, which is 6.1 grams if you combine the low and the high grade, weighted averaged it. So the coming quarter, they mentioned they'll see the high grade Deakin main area ramp up. So that should see a grade lift because 56% of the ore they mined came from stopes, the remaining from development ore, obviously. So now I guess the priority will be for them to focus on this stope dirt haulage, more so than getting the development way ahead and balance it out at around 66% from stopes and the remainder from development ore. We talked about that Northern Star that was something they were really looking to optimise over at their Pogo, trying to get to that 70-30 split. But it's just one of those big balancing acts because you need the development far enough ahead to take the pressure off the production cycle. You need to be punching the decline down, get the levels in so you can get the long hole rigs in there to drill the stopes. But if it's too far ahead, you're putting a lot of haulage capacity because you're putting more development in. You need to get that dirt out to keep the jumbos going because they'll be all pissing and whinging because they're parked up. And all that extra haulage capacity takes it away from the stope haulage.
Yeah.
So, and then if you then got a lot of development ore drives going and you're well ahead, then you're carting more development ore, which, as we mentioned the other week, is a wider excavation. So your development ore grade will bring down the overall grade because it's always going to be lower than your stoping grade. So it's a big, massive balancing act. It's been happening forever in underground mine, and this isn't new, but it's always the big balancing act between trying to keep everyone happy because contractors usually make more money out of jumbo development.
Yeah.
So a lot of stakeholders to balance there. So look, in terms of that improved stoping grade, there's a leading indicator you can see in this quarterly showing that it will likely lift next quarter because you can see their development ore grade was 4.
Yeah.
And their stoping ore grade was 4.1. So that means they've been developing higher grade areas than they've been actually stoping. So the development drives they're punching in ahead are looking like they're going to be, because remember, development ore is always going to be lower grade than the stoping ore. So that would indicate that those areas that they've been doing that jumbo development in will then result in a higher grade stoping area when those stopes come online. So that's sort of a leading indicator to show that they're going to have higher grade stope dirt coming in the next quarters. So
Okay, that's positive.
Oh, it's bloody mining's positive. Marty, I know we talk negative, but we just got to think of the positives, boys. They added 50,000 ounces of hedging this quarter. They did have 200,000. Now they've got 250. 25,000 of those ounces they were at 31.91 Aussie. So they've spread that across the entire hedge book. So that was precedent on the drawdown of the working cap facility. And then they also added another 25,000 ounces over the next 6 quarters, priced at 32.33. So
It's an interesting hedge profile, isn't it? How the price sort of comes down.
yeah, so those top bits at the front, that's what was added in this quarter, and they obviously added spread the rest out. So look, and you see why they've done it. Like it's like, right, let's guarantee that cash in the door at the start while we're just in this fickly period with maintaining that bank balance. Because from mid 2025 to 27, they've got about 28% of their quarterly gold hedged at around 2,700 an ounce. So that's added to a 200,000 ounce run rate that they're targeting. So we'll see what happens then. So it's not overly hedged, but if they can get that 40,000 ounce per quarter in that they've forecasted for the next 2 quarters, they should get an average realised price taking into account that hedge profile. And if gold stays around the same it is now, they should get a realised price around $3,000 an ounce.
It's pretty healthy.
that's 120 mil in revenue per quarter. So they, as I said, they haven't given any cost guidance yet, but if you add up the outgoings of this quarter, so yeah, they had 39.5 million in growth capex, another 16.5 in property and plant, 5.5 in interest, 20.5 in production staff and admin. So that's 82 million.
Shouldn't you add on the develop invoice that comes in next?
Yeah, true. You could. Yeah, another 10.
Yeah,
that was another 11. But then they wouldn't have included that in their one, so it'll go on the next one and probably keep flowing. Okay, even 80 or 90.
Yep.
But look, a lot of variables at play in terms of, look, the guidance they've put, that might be weighted towards the June quarter, considering they're just starting to access these higher grade areas. Cost of production will definitely increase as the mining rate increases. More trucks, more everything is higher cost. But then that growth capex and property and plant, you would assume that will come down because now they're in production. A lot of that would have been sunk. But look, because if you add up all the property and plant and growth capex since that September quarter 2022, that comes in at 314 million. And their pre-production capex in the DFX was 252. So I'm assuming that most of that pre-production would have been sunk by now, and that will be coming down. I know they'll have, once they give guidance, I think they'll be putting a pace plan in next financial year, so that'll be probably more capex to come out of there. But look, say a bit goes up, a bit goes down, and they sit around similar to their outgoings this quarter, that could see them heading towards, it could be 30, 50 million operational free cash flow generation before taking out the debt repayments if they hit that 40,000 ounces.
If everything goes smooth.
Everything goes smooth. So that's pretty good going there. And like with, 44 million in the bank at the moment, and if they can hit those ounces and keep the costs down, you'd think that that'll see them not having to raise any dosh.
I think that's exactly it, Matty. You said the cost should go up, but if they hit those ounces, the unit cost should over the coming quarters come down. And that's what all the analysts and the shareholders will have their eyes fixed on, those unit costs coming down.
Yeah.
So there you go, boys.
Mate, the optimist you are, and I think it's an important question to ask. It was in our Q&A on Friday's show for anyone that didn't catch it. Someone asked what the hell's going on at Bellevue, right? Because they saw share price kind of trending lower after first gold, and they wondered if some market participants knew something that others didn't. Now we've got the quarterly. You're more optimistic, Matty. I'm always a pessimist with these sorts of things. So I look at the 40 million and think, it could be skinny if things don't go perfectly.
It's got a lot of moving parts have to fall into place for this to go perfectly. It's not as easy as we talk about it on a potty, is it?
No, and you said when they build the pace plan, how much does one of them cost?
Oh, depends on the scale. That could be 20 or 30 million.
Okay, gotcha. Yeah. So squeezing that in, So I wonder if they might choose to be prudent and add a little bit of buffer, or if they're really confident right now based on performance to date and think we're home sweet. Yeah,
and it's whether because the pace plan's you don't get really an immediate benefit from it. Like it's a real long-term benefit because it's more you deplete your resource so much quicker without it.
Yeah.
But it will pace plan, like they do have a lot of mining areas, so it shouldn't impact it too much, but introducing paste into the cycle actually slows your cycle down.
Yeah.
Because it's that extra. As soon as you finish a stope, leave a pillar, you just send the long hole back in, start drilling, start blowing it up again. You introduce paste, you got to put walls in, you got to fill it, you got to let it cure, then you got to develop a bit back through the paste to get access to it. It adds a lot to the cycle.
Yeah. Not
really for an immediate benefit, because it's the long-term benefit of not depleting your reserves so quickly. So, it's where I assume they're going to put it in. When you got bloody high-grade dirt, you're mad to leave it behind.
Yeah,
and you get a lot more. You get more time in each level because you're not leaving pillars and getting to the next one as quick. So, I can't see them not putting it in.
Yeah.
Be interesting to see, but as you said, if they're going to have enough free cash to pay for it without tapping the market.
Yep. We'll wait and see.
Wait and see. But I tell you what, grade is king.
It is king.
if they get it out and they'll make cash. Simple as that. Right, JD or Trav, whoever, open slather. IGO, boys, the lithium business update.
IGO. So this one, that the timing was really peculiar. I'm not sure what you guys thought about it, but quarterly's coming out Wednesday, and they come out and sort of clean the slate today. They announce a changing to the pricing mechanism, sort of flow-on effects on production. So, you know, we've all got various thoughts about what's going to come out in that quarterly relating to all the different parts of their business on Wednesday. But we'll get into that later. So they came out with an update to the pricing mechanism. So it was previously reported, I think in October it first came out, that they'd been building stockpiles at Greenbushes, which sort of took everyone a bit aback because this is one of the lowest cost mines in the world. But it was really a result of the skewed incentives within that JV, as well as just the broader lithium price environment that we're sitting in. So IGO were receiving the prices on a 3-month lag, which meant they received those weaker prices on the way up, and then the JV partners didn't really want to play ball on the way down because it wasn't really in their interests. So you've got this broader JV group called Winfield, and that is the JV between Albemarle and...
No, don't tell, not the Winnie Reds.
Windfield.
That's just a different subsidiary, mate. But that JV is Albemarle and TLEA. And then within that, you've got this other JV between Tianqi and IGO, which IGO bought into a couple of years back now. So there'd been negotiations going on for quite a while to address this. And this is pretty much what they've come out with, this new mechanism. It's active as of the 1st of this month, 2024. And now that's going to have pricing reset monthly as opposed to every 3 months. And those prices are going to be based on an average of the previous month as reported by 4 different agencies, minus a 5% discount. So, I mean, getting into what we kind of think about this, IGO have had to forego better prices pretty much purely because Tianqi weren't willing to play ball. So the incentives are now way more aligned, but they're not perfect. You know, they're still trailing, and you've also got that discount, so it's coming at a cost for IGO, plus the potential lost revenue over the past quarter as they were sort of playing these games between one another. So getting into like the broader thoughts about this pricing mechanism, I think it's clear that IGO have had to forego a bit as Tianqi just weren't willing to play as the lithium market was cooling. And I think now the incentives are much more aligned, although they're still obviously not perfect. IGO had to pay a bit to get this deal done, like we just said, the 5% discount, plus the lost potential revenue as ore was being stockpiled over the past quarter or so. And I think it really goes to show, as we'll get into in a couple different topics later, how important being the controlling JV partner really is. And lastly, on the pricing mechanism, I wonder if the ATO will have something to say about this. There could be a bit more regarding changing it up mid-financial year from what had previously been guaranteed.
Because they're effectively, because of this mechanism there, they got the benefit on the when the price was going up, that ATO aren't getting as much tax in the door when the price is going down.
Yeah, exactly. So then there was also the changes to production, and I think the words were a bit obscure, a bit funny because of the nature of the JV. But essentially, production has been downgraded at Greenbushes. So you've got second half sales being 20% lower than what production will be. Greenbushes on a 100% basis is going to see production be reduced by 100,000 tonnes. So that goes from 1.45 million tonnes to 1.35 million tonnes. I think this is ultimately because the JV partners, Albemarle and TLEA, or mainly Tianqi in this case, are much more focused on hydroxide output. So they've decided to slow production, slow sales on the back of the weaker market demand that we've been seeing, and that they're not going to flood the market with new product. You also got inventories continuing to build there.
Mate, those inventories like continuing to build, it's like a very different strategy to MinRes and Pilbara, which is really interesting to see, right? Like both MinRes and Pilbara are marching ahead with expansion projects, and they're delivering all their production to the market versus stockpiling right now, which might seem a bit funny because Greenbushes is literally the best lithium mine in the world. So I can't help but wonder if IGO had operating control over Greenbushes, would they make the same decision right now as MinRes and as Pilbara, because the reality is IGO don't have the ability to make that decision. They're kind of under they have to do whatever Tianqi wants to do effectively, because Tianqi control the JV, TLEA, which has control over the broader JV Windfield.
Yeah, I mean, I think it'd be interesting to try and think through what they would do, and in a way, they're trying to capture the best of both worlds, because they are sticking with the CGP3 upgrade, which is going to come in 2025, and that's going to add 520,000 tons per annum to green bushes. So, I mean, I think you could sort of imply, it wasn't very well worded in the statement, that there wasn't actually room physically to store stockpiles at the mine. So I'm sure the other players, the MinReses of the world, like you mentioned, Trav, they're going to be pretty happy with this decision to sell less, because, it means less supply in the market, and hopefully for them, they can get a better price. There was no change to the cash cost guidance, although they did say they expected it to come in above guidance. So I'm sure perhaps in the quarterly, we'll see more thoughts coming in on that. I think overall on IGO now, the pricing mechanism needed to be changed, and I think they've addressed one of the concerns that the market has, or one sort of overhang over the stock. They've addressed it to, as great an extent as they could, although it's not perfect yet. And this quarterly coming out on Wednesday is just going to be really, really interesting. You've got most likely a weaker cash build, not to mention the pretty poor lithium business, which, we haven't obviously spoken about today, but we've gone into at length over the past couple of weeks. So I think we can all sort of feel what's going to happen on that front. Then you've also got the cash drain at Kwinana. So it'll be interesting to see if there's been any sort of improvement going on there. And then you've got other factors floating in the background, like, is there a big tax bill that they had due? The JV held $1.4 billion in debt earlier in 2023. And again, that's pretty opaque, so we haven't had much color, but we know there's been more CapEx spend, there's been distributions. So I'm just very keen to see, and maybe it's not all coming out in the quarterly, maybe in the financials in February, we'll get a bit more insight into what's really going on behind the curtain at IGO.
I remain really, really interested, mate. And over the weekend, I was doing some reading around the lithium market, and there was one note that really caught my eye. And these were numbers from Citi regarding African lithium production. They put out this note basically saying that China imported 606,000 tonnes of spod from Africa in 2023. That's up from 81,000 in 2022, i.e. 7 times year-on-year growth rate coming out of Zimbabwe, Rwanda, Nigeria.
Oh, we never talk about any African operations, do we, except bloody Goulamina and AVZ.
The ones not producing.
the big ones that aren't.
Yeah. And I mean, in 2022, 94% of spod imported by China came from Australia. In 2023, that reduced down to 80% because of that Africa element, right? So to me, I found this really interesting, because I remember a big part of the bull thesis for lithium. Remember how many times you heard it takes so long to bring on a new lithium mine, and watching Liontown, of course, that makes sense, right? It does take a really long time to bring on a new lithium mine. But if these numbers from Citi are accurate, to me, it indicates that the most responsive supply to react to a more buoyant lithium market is actually Africa, not Australia. So I've got more to do to learn about the supply coming out of Africa, but I just found that really, really interesting.
And you'd be up on this, JD. You're reading shit all the time. Where's downstream at in like Korea and Japan for lithium? Because we're talking about China inventories. Where's the downstream at there? Are they still coming online or?
I mean, they're working on it. I think the latest and the most relevant update we got was with Pilbara, with their POSCO JV, which is, getting there. I think train 1 done, train 2 is getting there slowly.
That's Korea, isn't it?
Yeah, that one's in Korea, yeah. But I mean, I think, China still remains key. And going back to what you said earlier about how we never speak about this African supply, Maddie, I think it's not just because the stuff is being mined and sent to China, but the Chinese actually have huge ownership interests in these mines in Africa. And that's why we're not hearing so much about this coming online, and it just sort of falls under the rug for us.
Yeah.
A lot of, again, Trav, Just moving parts everywhere.
Moving parts.
Just flow of money, flow of
The
lithium.
flows of cash.
Just flows of cash. That'd be interesting to see once, like, you know, Korea and Japan downstream come online, if that becomes a bit of a catalyst for the demand side, just because there's that extra capacity.
I don't imagine it that, you know, it'll be smooth for POSCO and the likes. Like, the reality is, like, the expertise, the downstream expertise is in China. I imagine like it'll take a while to really hone in on the processes that can do this efficiently. So
even lithium, it's still getting its headlines. The drops, we haven't forgotten about you. Don't worry. It wasn't all weighted towards last year. Speaking of other bloody headlines in the morning news, boys. The latest Perseus and OreCorp developments. Trav, right in your wheelhouse, this stuff, mate. What is going on?
Battle for Nyanzaga.
Oh, the battle. I love a battle.
A few slight developments in this battle, Maddie, featuring Perseus, Silvercorp and OreCorp, of course. I'll just give a quick recap for the money miners out there. So Perseus is trying its best to outcompete Silvercorp's bid without overpaying by a cent. So they lobbed a 55 cent.
0.1 of a cent, wasn't it? We figured the other week.
Oh, mate, it was it was pretty marginal. But they lobbed a 55 cent cash offer for OreCorp, which, you know, works out to be a slight premium to the Silvercorp bid recommended by the OreCorp board presently. On Thursday last week, I saw OreCorp drop their notice of annual general meeting where they put a few resolutions to shareholders to vote on in a month's time. And you might be thinking AGM season was bloody ages ago. What are we doing getting one coming up now? Well, they got an extension from ASIC to defer theirs because of the live kind of scheme that they was on foot at the time. So I had to take a peek at the resolutions being put forward to shareholders, Maddie and JD, because, you know, you never know what slips in these things.
Oh, because no one ever bloody goes into that much detail. I would never have read them unless I had a bloody mining podcast.
All right, let's I think that's exactly what they're hoping, Maddie. That is exactly what they're hoping.
I found two resolutions in there that, you know, we've got to talk about. Very cheeky ones, I thought. Resolution 7. This is a funny one in layman's terms. We've got to increase the maximum non-executive director remuneration from 500k per annum to 750k per annum, please. That's how I interpret that one. So let's keep in mind that OreCorp's board only has 5 people on there, 2 of which have exec roles, by the way. One's an exec chairman, the other one's the MD. So on my math, that's only 3 people on that board who are non-exec directors, which, you know, potentially have the right to bring in a maximum of 750k, i.e. 250k each for a non-exec position there, which
geez, that's not bad.
Rightio, mate. Rightio.
Better
Okay.
than 40 grand on the ASX.
Seems a little bit out of line with market standard on that one. It's almost something you chuck in right before you might get taken over. And anyway, and then moving on, resolution number 8. In layman's terms, can we please adopt this new employee incentive plan now? It's been 3 years since the last one. I think this one's pretty cheeky. As I read it, it gives OreCorp the ability to issue up to 23.5 million equity securities to employees under this new incentive plan. And of course, look at this. The awards vest upon a change of control.
Oh, you beauty.
So, look, make of that what you will. This is unfortunately pretty commonplace in M&A. Target companies, they tend to shove through a bunch of resolutions that give boards and management a very juicy payday on a change of control event. Some would call this alignment. Others would call it greedy. I'll let the money miners be the judge. I don't imagine that their biggest shareholder, however, being Perseus themselves, will be voting in favour of these. I can't imagine they would. And then the following day after these resolutions were put forward via the notice of meeting, OreCorp, they dropped their quarterly to the market with some updated commentary on Perseus's offer. This is funny. The gist of the commentary in this quarterly is that they still recommend shareholders accept the Silvercorp offer and not the Perseus offer is the implication. Check out this on the front page. The board says the Silvercorp offer is currently equivalent to Aussie 0.551 per share. Key word there, currently.
Oh, so we're at 0.01 of a cent now. 0.1 of a cent.
Hang on, mate. That value there was footnoted, footnote 1. So I went to the footnote at the bottom of the page, and you see that that 0.551 is based on the 20-day VWAP and the average 20-day exchange rate. And I don't know about you guys, but I don't think measuring something over 20 days means it's currently worth that. In fact, if I were to use currently, and on my conversion on last price and exchange rates, it's currently valued at 54 cents on my math. Hence,
Mate, this 55 number will never leave my head after this. 55. It's all about the 55.
mate, it's not like boards and management to ever just cherry pick the data and the VWAP and the timeframes in order to make, their recommendations look like the right ones.
I actually found an Australian classic, boys, The Castle, one of the greatest Australian movies. There's
Brilliant
a quote
movie.
from there I'm going to play that just depicts the Perseus offer over the top of Silvercorp. I'll play it now.
Avon?
Yeah, fine.
Farouk. I pay cash now.
No. Hold your horses. What is it with wogs and cash?
So,
Matt, if you cast your mind back as well, I think that's the second time the Castle has got a little snippet played on the show. I think you have to
what
cast
do you
your
know
mind back
about
about
lead?
10 months.
that's the one. Yes. Anyway, Trav, continue on.
Well, on my math, 54 cents is less than the Perseus offer, gentlemen. So finally, to wrap up, the update, Perseus dropped their bidder statement to market this morning. There's not much worth talking about inside there based on my skim read. There's this paragraph which basically outlines that Perseus would maximise returns for shareholders if they can't increase their interest in Allcorp, which to me sounds like they'd look to sell their shares, would be preferred to accepting the Silvercorp offer, and then they'd have to take Silvercorp shares as part of that themselves. So anyway, I'm getting some deja vu on this one, Maddie and JD. There's definitely some parallels to the Battle of Leonora. So I think let's keep watching it. I'm going to be really curious to see how Perseus shareholders vote on A, the AGM resolutions, and B, are they going to vote for the Silvercorp offer versus the Perseus offer, despite the board recommending the Silvercorp offer at what is currently a lower value on my calcs?
God, bloody interesting.
Love it, Trav.
Very good.
Alrighty,
Right.
should we get into Gold Road?
Gold Road. Jesus, got a golden slap on the arse today, down 17%. Big decline on their quarterly. Lost about 30% of their value in the last month. So really under pressure, old Gold Road. So for the money miners that don't know, Gold Road they're the JV partner with Goldfields at Gruyere. So 50-50 JV for that big pit. But they've also got they've got a 20% stake in De Grey as
Correct.
well, which will tie in later. Boys, quarterly numbers. What's given it the big smack?
Alrighty, let's get into the quarterly numbers, guys. So 75,000 ounces produced. That was 14,000 ounces lower quarter on quarter. And that's on a 100% basis. So 50% of that belongs to Gold Road. And then not only was production a massive downgrade from the last quarter, but you got all-in sustaining costs just under 2,000 Aussie dollars an ounce, $300 higher than the last quarter. So shocking all round. The 2024 calendar year guidance has dropped to 300 to 335,000 ounces. Previous year was revised down to 320 to 350. So there was this red flag that jumped out immediately just reading this one. Annual production met the lower end of guidance while all-in sustaining costs was slightly higher than guided. Now that doesn't sound that great, guys, but I think it's bending the truth to say the least, because back in June, they revised that production guidance lower. So they only just made the guidance that had been downgraded massively just 6 months ago. So ultimately, their guidance meets the lower end of what they revised and costs exceeded what they guided to by a couple dollars. I don't think these guys got the memo on under-promise and over-deliver like a few of the other peers in the gold industry tend to do.
They might have thought they were at the time.
Well, there's been these like rumours swirling around that they've been looking to use their script for various things, De Grey, or what Regis back in the day. Well, maybe it makes sense why.
Yeah.
I think that might go out the window now. So on the operating cash flow side of things, that was down to $70 million for the quarter. So that was down $24 million quarter on quarter, and free cash flow of just $14 million. That's not that great when you consider this is a $1.6 billion company that should really be harvesting cash given where they sort of are now. So like you said, Maddie, they finished the quarter $150 million in cash. That was down from $210 million. That's because they chipped into De Grey's placement a few months back now. So they maintain that just under 20% ownership there. that means their investments are valued at $465 million. And they also paid 75 or 74 in dividends over the quarter. So they got an EV of about $1 billion at the moment.
Hang on, Jada. You say their investments total $465 million. I'd actually call their 50% interest in Gruyere an investment too, because it's bloody non-controlling.
Yeah.
It sure is, mate. So, I mean, we'll get into the non-controlling aspect and what that sort of means, and the mining contractors and all of that now, because that's exactly why the output was so shocking. And if you tuned into the quarterly call, management were not happy, to say the least, with the contractor Macca. So essentially, lower labour availability and increased waste movement was the main reason for the poor quarterly performance. So they didn't have the people, mining underperformed, and then you've got delays getting to the higher grade stuff, and then you end up using the lower grade stockpiles, which are sort of 0.74 grams per tonne dirt to fill the mill, which just means your ounces come off massively at the end of the day. So the head grade was down 8% quarter on quarter.
Because you can see how much the stripping ratio has increased this quarter, as gone from in the 2s now up to 5.17. So, and look, part of their guidance they've put out is saying that, look, increased waste movement will be a contributing factor going forward as well. So didn't sound like they were saying that it wasn't a one-off.
It didn't read well.
And the increased waste is obviously to get to higher grade parts of the ore body. So might be a bit more pain to come there by the looks.
Yeah, so in the quarterly, it had written that Macca, the mining contractor, has been facing increasing challenges resourcing and maintaining the required workforce. And then they had another sort of swipe on the call saying that Macca had told them everything was under control when, things clearly weren't. So they're obviously not happy on that front. And there's a few sort of questions served up regarding Macca being the contractor at Ravensthorpe, who's, had layoffs that we've spoken about in the past couple of weeks, and whether those layoffs and those people are going to be able to go up to Gruyere and sort of solve the problems for Gold Road. So Gold Road, they were pretty vague. They weren't given any hard numbers. They sort of said, yeah, it's gonna try and address the issue with getting those people in there, but we don't know yet whether the skill sets match up and everything. So, like we said, guidance
just need
is
bloody truck drivers. So, yeah,
I think so. I think you're
truck
right, man.
drivers to move waste.
Like, given Ravensthorpe have a big conveyor, I don't think they have bloody truck drivers.
Oh, just get anyone. Just bloody give them a ticket. Couple of weeks training, go your hardest.
I think they'll be going pretty hard at solving that one, Matty. There was also another sort of pop at the industry, and we spoke about this on the show we did on the long weekend. So there's a comment from the MD. It's fairly ubiquitous thing in the gold mining industry that companies put sustaining costs into growth capex. Gold Road report clean. So, fair enough. We like companies that do that, although you don't always take their word for it.
Share price, hold your head high, but your share price is down 17%, but you can hold your head high. That's all right.
That's it. There was also the question whether Gold Road should take over the reins from Goldfields, and they sort of agreed that the mine wasn't performing to standard, but all they really said was that new leadership is coming in at Goldfields, and hopefully that'll fix it. And they noted that Macca also has new ownership in Thies, but I mean that happened in 2022, so I would have thought changes would be reflected by now.
I don't think they were still like keeping the Macca people and brand and everything. It wasn't really, they were just essentially owning the business, and it was the same subsidiary. So I'm not sure how much of an a factor that is or not.
Yeah, I mean ultimately I don't think it sort of went down too well or convinced anyone really on the call. So I mean the last question that was served up was, would Gold Road consider buying out Goldfields out of the JV? And they sort of said that they'd love to own 100%, even though that seems relatively unfeasible at the moment. And they also sort of said that, this should be a 350,000 ounce per annum mine. So they've got a bit of work to do to get it there.
First pass thought when I saw that was like, I thought it would be the other way around. I thought if there's going to be M&A that Goldfields would take out Gold Road and then maybe expose themselves to having the interest in De Grey. I don't know. You're seeing Gold Road drop this much. Do you think they might be a little bit of a target for companies that might be looking to get that Gruyere exposure and potentially having a bloody whip at De Grey? What do you think, boys?
I mean, potentially you have to be comfortable with two things. One being owning 50% of a non-controlling interest in a joint venture, which is not really like ideal for most gold miners out there to let someone else control things. And two, you have to be comfortable owning 20% of De Grey, which plenty of miners out there might actually not want to own. So yeah,
I think you're dead right as well, though. Just looking at the two of these, who's the more likely to take over the other? You would think, looking at the balance sheets, that Goldfields would be the more likely to buy Gold Road out of that 50% stake.
Well, I'm sure the proposition is just that Gold Road buy the other half of the JV, not the company.
Yeah, definitely. Boys, should we get into Develop?
So they've, God, what were they? Buck 90 last week after all the lithium downturn. Obviously getting in that situation where, they've bought Pioneer Dome. They took over Essential. They've got Woodlawn and all that waiting in the midst, waiting on a rebound of the copper price. They just need a bit of a commodities turnaround, which was quoted in the announcement. They're poised for a commodities turnaround. Which one comes first, we don't know. But look, they ended the quarter with $32.5 million in cash. So they were down from $56.5 million last quarter. So they went through $24 million. So they said they generated $32 million contract revenue, but only 21 of that went onto the cash flow statement because they said they received December month's payment for the contracting at Bellevue at the start of January. So they'd effectively have $43.5 million in the bank as of today. And then look, remember, Bill Beeman's got 28 million options he can exercise at 75 cents. So there's $21 that could come in the door right there if needed. So look, if you take away looking at the actual contract of how much money they make out of this contract, if you take away some of this, I'll show it up here. If you take away some of the staff costs that wouldn't be associated specifically with the Bellevue contract and add the 11 million they received at the start of Jan, look like they might have made a couple of million from the contract. Remember, they're ramping up the contract into a development and production mode, so I'm not sure if that has an effect until that sort of stabilises over the coming quarters. But look, remember, underground contracting, it's a low margin game. They have the Mount Marion contract awarded to them. Yet to see if the lithium price action we've seen will have any effect on this. So I assume we haven't heard anything saying it wouldn't go ahead. I think Chris Minrez still talked about that it will be in their call, so we can assume that is still going ahead. Because someone quoted on Twitter last week that there was an article about Minrez looking to sell their 14% stake in Develop. I couldn't find the article.
They linked it to someone who translated the article from Hot Copper, but I could never locate the actual West Australian.
Yeah, so they said it was in the Australian, but I couldn't find it anyway. So, but if that was the case, it probably would make sense if Minrez, if they did sell their stake in Develop, obviously extra cash for Minrez, but it's probably also for future conflicts for contracts. So even though the Mount Marion contract did get approved, I think if they're going to work together in future and there is that cross-holding, it might be a bit of a conflict. Probably pretty similar to how Mick McMullen resigned.
I mean, has Chris ever cared about conflicts in the past? I mean, what do you reckon he owns all these minority interests in the bloody lithium companies for?
Yeah, but then I suppose it's when Mount Marion, you got Ganfeng there, like when there's JVs involved. Not sure if it'd get here. Bit that way or not, because the same as Mick McMullen, he resigned as director from Develop in February last year. So look, and I assume Develop will be looking to get a contract over at CSA or with Metals Acquisition Corp or in and around any future stuff that Mac does. So I guess what's next for Develop, boys? Because look, they talk about getting those additional. They want 2 or 3 contracts. They've technically got 2 now. Looking to get a third, whether it's with like Metals Acquisition Corp, because there's not really much else coming online in the underground contract department. And because I know there was the core lithium one that companies were talking about, but as we know, that's been put on care and maintenance for the interim. But I don't, underground contracting, it's a bit of revenue, but it's not what Bill's in it for. I don't think. If we see hypothetically, if like interest rates fall and we see this lift in the copper price that everyone's waiting for, and hopefully zinc as well, turning on Woodlawn, that's where developer will make the money. They've got 18 months of production ready to go there because they put a lot of development in advance. So probably a bit to do with getting the mill restarted there. But once that's going, if the commodity prices are favourable, that's where they'll make the money. So, because that essential deal, Pioneer Dome, that's purely contingent on a big lithium price rebound from what we're looking at now. Because look, you really need good lithium prices to make an underground lithium project work. Lithium underground's higher cost than open pit. Pioneer Dome's a lot thinner than a Kathleen Valley, so the mining cost would be even higher than what you'd see at Kathleen Valley, because to get to the ore, it's the same time and effort to get to the ore body, but once you get to the ore body, you're getting less of it when it's thinner. So
it's a bit of a precarious situation in some ways because obviously Bill came in when it was VentureX and there was still Sulphur Springs there, which doesn't really get talked about too much. Woodlawn was acquired out of administration. I think Heron was in administration from memory, and it seems like they want higher commodity prices for that before they flick it on, and then Essential Lithium's gone the other way after acquiring that one. So it's a portfolio of development assets that don't have commodity prices, to justify development at this stage, it appears.
Yeah, so because copper's sitting at mid 8,000s tonne US, so I think Aussie you'd be looking up and then get it back to Aussie like sort of $15,000 a tonne to turn it on, I'd assume, and like the Sulphur Springs thing is sitting there ready, like potentially to be developed in that really high copper price environment that I think it's copper up the top, then it goes into zinc. So zinc needs to go with it as well, because they're not just purely copper mines. They need the zinc price up as well.
Mr. Beam, it doesn't sit still for long though, mate. Reckon you're doing another deal?
Yeah, well, and that's the thing. If it's sitting there for a while and there's a bit more, because there's care and maintenance costs associated with having Woodlawn, and it's whether they'll get enough contracts to sort of keep breaking even to offset, care and maintenance and having these other assets. I don't think they'll have the cash go down and be forced to raise. I think, as you said, he'd look to do another deal or something like that to really prop things up. Where that'll be, we don't know.
Yep. Well, when he gets the right
I reckon
deal,
he'd
mate.
be strongly considering buying a gold mine again after everything that's happened.
Oh, be counter-cyclical, mate.
Yes. But no, he's gone all in on the future-facing minerals, so we'll see if he sticks to it or not.
Yep.
Boys, let's head over to Sierra Leone, beautiful part of the world. That was where bloody you could have got a dose of Ebola back in the day over there.
Well, this is a slightly different problem that we're talking about here. So Sierra Rutile, they've had a bit of a shocking day, guys, down 52%, down 80% in the last 6 months. And I saw a tweet from Emmanuel Dat, who we've had on the show in the past, and I think it summed it up pretty well. If it looks too good to be true, it usually is, especially for assets located in certain African jurisdictions. I think, boy, we've spoken about similar sort of stories in the not too distant past. So the government here of Sierra Leone, they'd previously advised SRX that they were looking to renegotiate a previous agreement that they'd had. Negotiations had been ongoing since May of 2023, and today the government has essentially changed the terms that SRX would have to operate under. So not only are there new terms going forward, but the company would have to make a substantial and unspecified payment to the government, and the company's just come out and said this makes the mine economic. They're going to continue to negotiate in good faith, but I think likely this could go the way of quite a few other projects that we've seen in Africa in riskier jurisdictions and, be escalated to arbitration in some sort of international court. And staying on
this
the...
one was an overhang for our Luca for ages, and demerging it was, if anything, just a pitch to, re-rate on a geopolitical exposure perspective. And lo and behold, mate, bloody Sierra Rutile's had some geopolitical carnage come its way since.
It looks pretty smart in hindsight, right? And staying on the theme of Africa, there was one more story I saw this weekend, which I thought was worth mentioning, and it's the continued Chinese investment in Africa and specifically in the Congo. So we don't need to go into the details, but essentially Chinese construction companies have agreed to invest up to US $7 billion into the DRC, into various infrastructure projects. So we're talking about railways and, eventually ports and all those sorts of things outside the DRC. So we've discussed in the past about just how high quality the copper and the cobalt assets that you've got there are. And investing in the infrastructure is just going to make these assets more and more competitive. So the negotiations seem like they're, early-ish stage. You often see these announcements come and then they get renegotiated later. They've got ups and downs along the way. But I couldn't help but think about the nickel industry in Indonesia and how nobody took it so seriously for a while, but the Chinese were pumping in the money. It was happening. They were working on it, the processing, the mines, everything. And before you know it, we sort of are where we are here in 2024 now. And all the other countries are really copping the brunt of what they've managed to do from that investment. And who knows, maybe those super high grade copper assets just become more and more competitive in the heart of Africa.
Well, it's the no truer thing to say. The quality of the assets is directly proportional to the amount of corruption, and that is the Congo.
Yeah, I think you're spot on with that one, Matty.
Oh, very good, boys. Very good. Thanks for tuning in from across. JD's going to be, you'd say he's doing a bit of money of mine, wheeling and dealing periodically in Melbourne these days, every now and then. So you will be blessed with his beautiful face in the flesh. Oh, none of yous will. We will be, unless you come and see him. So bloody go, mate. If you're in Melbourne, you want to catch up with JD, and you're give him a buzz.
Absolutely, get in touch.
Make sure if you're a real small exploration company as well, be sure to give him a buzz.
He loves listening to a new story.
He loves. Tell him how great your story is.
Oh, Matty, don't stop talking, mate. Keep going.
The lower the market cap, the keener he is to have it yarn with you.
He loves it. Right, thanks to all the partners at the top of the show, InvestorHub and K-Drill. Also got DSI Underground, Terra Capital, McMahon Mining Title Services, Future Proof Consulting, Anytime Exploration, KCA, SI Services, and Brooks Airways. And come Wednesday, we've got a couple of new ones coming on board, one oldie and one newbie, and we can't wait to rip them out for the money miners.
Very excited, mate.
A whole new set of myths and lies for me to make up. I love it. They are all true, actually. Everything I say in a sponsorship ad, all true. Hoodaroo, money miners.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.